the interesting thing from an IP Group shareholders' point of view is that we license the fundamental IP behind that anti-obesity program to Pfizer. So that means that our shareholders stand to benefit from significant potential future royalty income.
Hello, you're watching Proactive. I'm joined by Greg Smith, the CEO of IP Group. Greg, very good to speak with you. You're on with your 2025 results and you've reported NAV per share up by 13%, driven in part by the recognition of future royalties from Pfizer's acquisition of Metsera. Can you explain how these royalties and milestone payments will impact your revenue in the coming years?
Thank you, Stephen. Yes, we're out with results today, and I'm very pleased to report that we have delivered on what I said was our top priority for 2025 and delivering positive NAV per share growth. So we're very pleased to deliver on that key objective for the year. And as you mentioned, a large part of that has been driven by the really interesting transaction during the year where Pfizer acquired a business called Metsera for £10 billion worth of $10 billion of consideration. And the interesting thing from an IP Group shareholders' point of view is that we license the fundamental IP behind that anti-obesity program to Pfizer. So that means that our shareholders stand to benefit from significant potential future royalty income. We benefit from financial exposure to the lead program, which is now in phase 3, alongside several other programs. At the year end, we have fair valued that exposure, and that has led to the recognition of an asset totaling about £130 million, or getting on for about 14 pence per share. So that has been, the single biggest positive transaction for the group this year.
So, Greg, that was one of the highlights, but take us through some of the other portfolio developments last year, such as Hinge Health's IPO and also the sale of Monolith.
Yeah, there's been a number of encouraging developments this year. There have been one or two, as there always are, setbacks. Earlier this year, we mentioned Pulmicide, which had, unfortunately, a failure in phase 3. But I'm pleased to report that we had many more positives. So you mentioned the successful IPO of Hinge Health on the New York Stock Exchange. That occurred in May. And over the course of 2025 and into early 2026, we have realized in cash our entire position. So about 18 million or so of proceeds during full year 2025 and a further 17 million during 2026. And that has resulted in a multiple of about 50 times our original investment. So a very successful financial outcome for IP Group shareholders, and a fantastic business which continues to grow. Also, during the year, we announced the sale of a business called Monolith. That was to Nasdaq-listed CoreWeave. That resulted in a few £1 million of consideration being received during full year 2025, with a further 18 to 20 to be received during 2026. So two really good exits during the year. It's also worth pointing out that we had a number of large company fundraisings. I would particularly highlight a therapeutics business called Artios. They completed a $100 million plus Series D financing that was led by two very well-known life science investors, RA Capital and SV Health. And also just in the last month or so, Oxa, which is our autonomous vehicles business, which is an Oxford spin-out, raised £100 million Series D as well. And that was led by National Wealth Fund with participation from Nventures, which is Nvidia's venture capital arm. So there's been some great exits and also some great evidence of some headline shareholders coming in to fund the next generation of winners.
In fact, you're targeting £250 million in exits by the end of 2027. You also invested £70 million across 31 companies. How do you balance disciplined investing with early stage opportunities, Greg?
Yeah, so we are targeting delivering 250 million of exits between 2025, and we delivered about 68 million of realizations in 2025, and the end of 2027. So we're on track for delivering against that target. In terms of how we balance the sort of the sourcing side and capital allocation, I would certainly say that one of the strategic advantages we have for sourcing proprietary deal flow is our Park Walk EIS fund manager. And through that business, we source a lot of our early stage investment deals. That's effectively done off balance sheet through our EIS funds that we manage. We manage a number of those funds in partnership with universities such as Oxford and Cambridge. And earlier in 2025, we also announced a partnership with Northern Gritstone to manage some EIS capital for some of the universities around Manchester and Liverpool. So that continues to be the case. A lot of the early stage sourcing is done sort of off balance sheet, as it were, through Park Walk. A lot of the balance sheet finance over the last couple of years has been deliberately targeted on ensuring that our more mature companies get through to their milestones and get through to their exit points. And companies like Oxa and Artios are good examples. We pretty much held our corner in those financing rounds. So you've got a balance of early stage effectively being done off balance sheet and then focusing our investment capital from the balance sheet into the maturing businesses that hopefully sets us up for success and exits in years to come.
Greg, we've spoken previously about the opportunity for long-term capital investing in private assets in the UK. And I see there's a new mandate with Aberdeen. Can you tell us more about that?
Yeah, we're very pleased to have partnered with Aberdeen under an arrangement that is intended to build up over time a portfolio of early stage and growth investments in the UK. I think it will be targeting a similar stage of investment to the experience that we've had with our Host Plus managed funds that we manage for a big Australian pension fund. And this is the first time that we've partnered with a UK manager in this regard. And I think it's very encouraging because there's been a lot spoken about. Certainly I and colleagues have spoken about both the need and the opportunity for further private capital from long-term sources in the UK to flow into areas such as venture, private equity, infrastructure, and other private assets. And I would say we saw some very encouraging signs over the course of 2025. And so it's great to be able to announce that partnership, and that will give us greater ability to support the next generation of innovation-led businesses with another long-term capital partner. And I look forward to being able to announce the first investments from that program and hopefully maybe another program during the course of this year with another investment partner. So we're definitely making good progress on our access to private capital.
Well, Greg, I hope you'll continue to keep us updated with your progress. Thank you very much for taking the time today.
Thank you, Stephen.
Greg Smith is the CEO of IP Group.